Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's December 5th. This will be our chart listing for the day. And we started off very similar to yesterday. Notice that we were trending sideways. We had a little failed break higher, and then it was all downhill after that. And we actually closed on almost uh, actually, we closed on this line here. So not quite on the low of the day, within a point or so of the low of the day. Notice that we did trade down into this trading range, and generally what'll happen when you trade, whichever way you trade into that trading range, that's probably the way. If it's successful continuing on, it's usually in the same direction that prices traded into that range. And as you can see, if I just back out a little bit here, we traded down into that range, and then we traded on down. Let's just see how close we got to a measured leg. That would call that the first leg. And there's your second leg. We ain't quite got there. Will we get there? Well, we're close. We may get there before the day's over. Or, actually today is over, but during the overnight we may trade on down to that. But that's pretty close. That would have been a pretty nice target on the way down. Generally, I'll tell you not to look for anything from the previous day, but in this case, you didn't really have anything to look for here, so you just about have to come over here and measure this leg down, and then bring it over here and look for a possible target if we continued lower. So, that's one good thing about price action. It works on every level. So, doesn't matter if you're looking at a 5-minute chart or a 5-hour chart or a 5-day chart or a tick chart or volume chart. The reason we like to go with a tick or volume chart is because you see more details in the price action. If you pull up a 5-minute chart, you wouldn't see nearly as many swings and details as you do on this chart, and that's why you need every advantage you can get when reading the price action. So by going to a tick or volume chart, you just see a little bit more, a few more details in the price action, and that's why I like it. So you can use a 5-minute chart, but I think I got an advantage over you if I'm using this chart versus you using a 5-minute chart. And so that's why we like it. But anyway, let's back out a little bit, talk about the trades, and get through today. You had to be a little careful in here. I really thought we were probably at this point when we were working down, I really thought we would probably work to here, but we ended up bouncing and going higher. Um, Entering right in here and this stuff, you got to be careful, especially once you know you got resistance here. Um, but let's talk about the trades. I put an arrow here. I want to talk about this. When you still got this trend line working higher here, there's been no break or anything, but you do get a double test right here and a little 1-tick break higher above this little double top. So this is a double test, and you're a long way away from the EMA. Very bearish bar. So, if you want to be super aggressive, you might want to try that trade, but I'm not crazy about it. So I didn't mark it either way, but I did want to talk about it because I figure somebody will ask me about it. But yeah, it does meet the double test rule. It is a 1-tick failed break higher above that double top. We're a long way away from the EMA. There really are basically two legs, measured legs up here. So you might consider that. You got a lower high right here. Let me make this a little bit bigger. Still a little hard to see. You got a lower high right here, but it's too bullish of a bar, and you got your reversal pattern here. Notice how we pushed on through the EMA, pulled back, had a little failed second entry long, a nice bearish bar. That's a no-brainer right there. Quick, easy trade. You might have had to use a limit order because you wouldn't have had a whole lot of time to get a stop order in there. So you might have had to use a limit order and hope it comes back and fills you there. But if you got in that trade, there's no issues, and you ride that one down, and then it bounces. We did have a break here. You might have, you still might have had this trend line drawn right here. It doesn't really fit well on the other side. I looked at this. As you can see, it's, you don't get anything that really confirms it on the other side, but you can't ignore it. So when you get this second entry short and a possible first break of it, then I'd probably go short right there. And then you get another second entry short, and we're still making lower highs and lower lows the whole way here. So even though you're not moving strongly, you're still moving down. And at that point, as long as you got enough room to get out before here, I'm good with that trade as well. But then you get, notice what happens. It does bounce right there. It gives you a double test of that level, a nice bullish bar. Really, your stop will have to go under this bar, but this is close enough off that support area that you could treat that like the signal bar and enter one tick above that. And we almost go all the way back to the top right there on that one trade. But notice you get a failed second entry short there, so I like entering again there just to try to ride it on up. And you never know, it could keep going, but of course it does find resistance there. And then we're too much overlap and sideways here. You know, it looks like a failed break lower here, which it really could be, but the signal bar is not very good. And then you get a higher low here. There's a failed second entry short here, but your signal bar again is not very good. Of course, on a trap like that, you don't have to worry about your signal bar so much. So you might argue for that one because it is a form of a breakout pullback too with a failed second entry short. So you might argue for that one. I'm probably not taking that right into that strong resistance. But if you don't take that, you don't really get another opportunity to enter. And then of course, when this breaks out, you got to be really concerned about a failure. And notice what happens. You make that new high there. You actually would probably want to draw this trend line right up through here. And you get a close or two outside. All these are closing outside. And a new high. And then a double top. Not a very good signal bar. It actually went lower first and went back up and then closed in the middle. So when it tries to break higher again, it makes a lower high. It makes that failed second entry long, and you're still a good ways away from the EMA, so I like entering there. And then it comes back here, and notice if you draw your trend line off those first two swings there, it comes back, turns down right off of it. This is and this is a double top, so this is still a failed second entry long here. So this is your more true-ish reversal pattern, and look at it go. And that's a great entry right there. That's probably, at that point, that was probably the better entry of the day. And then, of course, we get back in the range here. But notice what's happening here. Even though we bounced down here, I don't really see a good opportunity to get long here, especially when you're working down and you still got this trend line. We come back to it. Notice there's a new low first entry, second entry. You get a second entry short. It actually went higher, turns, and goes out the other side. Big bearish bar. I like going short there with a stop. It comes back again and gives you a lower high. Same thing. If you're already in, you can add on. If you're not in yet, I would get in there. And then you get your failed second entry long off of that high right there. And another bearish bar, again, right off that key entry point. So I like entering there again. And if you're not out of any of those, I don't even have a problem adding on because you still got enough room to get out here. Because you don't know that it's going to take off like this, but I would at least look for a measured move. I would start here. I would measure that and pull it over here. Actually, you would start right there, and that gives you one target, but really you need to measure this whole thing right here, and then you pull that over. And so you're looking for a target right in there. And then, of course, I showed you at the beginning how to find the big leg down from earlier, and that would have given you another target. But that pretty much gets you into the 2 o'clock hour. Notice that you got a shorter term trend line working down right through here. And you get your first break here, and it actually goes higher. Then you get that. The only reason this one is probably not red because you got a strong trend, and you're probably going to try to reach the other side of the channel, which we haven't done yet. So you still got some room, but you're right into that low of the day. And this is close to the 2 o'clock hour. This gets really critical in here to not make any mistakes. Okay, I had a little slight interruption, but yeah, this is getting a little bit aggressive down here. But there's reasons to consider that trade. I mean, it's been all downhill. You don't have a measured move yet. It's very bearish bar. It is right off that key entry point. That's the first break of it. We're not back to the EMA. We're not back to the main trend line though. Actually, there's probably, I didn't even put this on here because I wasn't interested in that trade that time of day. But yeah, see if you put that on there, it's right off the midline, and so that gives you another reason to enter that trade. So that just strengthens that a little more. I'd still leave that as green, but that does strengthen it a little more considering there's a midline running right down through there, and that's pretty obvious that that's the midline. You can see it bouncing there. You can see it turning down a couple of times there. You really needed a little more evidence, which you didn't get till down in here, but it's still enough evidence there to show you that that's probably a valid midline in the middle of that trend channel there. So just something else to add to it to maybe give you a little bit more encouragement that there's an additional reason to go short there, basically is what I'm trying to say. So a pretty good trading day. It looked like it was going to be a little flat here. Again, going back to this trade, I just don't think I'd take that trade. That's the reason I didn't mark it earlier. But again, there's some reasons, so I'll leave it green there. But yeah, quite a few trades today. Still some pretty good movement. Last couple of days we've started out slow, only to pick up in the afternoon, where generally it's going to be the opposite. You get most of your movement in the morning, and it really quietens down in the afternoon. But anyway, it is what it is. And not a bad trading day, but I'm going to wrap it up, and we'll be back again to do it tomorrow, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.